Welcome to today's deep dive. We are looking at a technical guide called Liquidity and Risk in Real-Time Systems, and our mission today is to decode the hidden mechanics of instant money transfers. Because, it's 2 a.m. on a Sunday, you tap send on your banking app, and the money arrives instantly.
Right. You probably don't even think twice about it.
Exactly. But the actual wholesale banking markets that move that cash, they're completely closed. So how did your bank just pull off the impossible?
Well, they've effectively had to, rewire the plumbing of the modern economy.
Hmm.
Moving from those old batch payments to real-time systems like FedNow or Pix, it eliminates settlement risk, sure, but it forces a massive operational shift.
Okay, let's unpack this.
Yeah.
Because getting rid of that settlement risk mandates, 24/7, 365 pre-funding, I look at it like filling up a massive gas tank on a Friday afternoon just because every gas station in town is closed for the long weekend.
Yeah, you basically have to anticipate every single mile your customers might drive over the next 3 days. And we see that playing out with institutions like Metro Bank. Friday evening hits, a holiday weekend's coming, and right before the Fed's wholesale window closes, they park $10 million into a dedicated FedNow sub-account.
Wow, 10 million. So when their customers trigger a $2 million spending surge at 1 a.m. on Saturday, the system just automatically debits that pre-funded reserve.
Exactly. There are absolutely no human treasury managers awake to approve it. The gas is already in the tank.
But wait, if they have to front millions of dollars every weekend just in case, isn't that incredibly inefficient? I mean, trapping capital like that creates a massive opportunity cost dilemma.
What's fascinating here is how banks are actually solving that exact dilemma.
Yeah.
Because, overfunding kills your interest yield, but underfunding means transactions fail mid-flight.
Which is a systemic PR disaster.
Oh, totally. So to thread that needle, they are pulling humans out of the equation entirely and relying on AI liquidity forecasting.
Which brings us to the Apex Wallet scenario from the guide. So they handle instant payouts for gig workers, and their AI treasury model isn't just reacting, it's constantly analyzing historical data to predict the future.
Right. It detects it on the 15th of the month. Withdrawals predictably spike by 450%.
So it automatically bumps their standard $5 million weekend buffer up to $22 million the night before.
Exactly. And because it gets the math right, 100,000 gig worker cash outs processed in under a single second, all without leaving excess capital sitting idle for the rest of the month.
Okay, so we've solved the liquidity problem by removing human treasury managers, but taking humans out of the loop removes the friction that, used to catch mistakes. Here's where it gets really interesting. These real-time rails are strictly credit push.
Meaning you have irrevocable finality. With legacy systems, there's a window to dispute a charge or claw the money back.
Right, you just cancel it.
Yeah, but with instant payments, the cryptographical settlement happens in milliseconds. Once it clears, that money legally belongs to the payee.
Like with Apex Logistics. They go to buy a commercial truck from Titan Vehicles, they wire $85,000, and within 800 milliseconds, the money is gone.
Instantly gone.
2 minutes later, they realize they selected the wrong vendor. In the old days, you just issue a stop payment. Now, you literally can't.
No, you're at the mercy of the system's architecture. Apex has to have their bank issue an ISO 2022 request for return.
The Camp 056 thing?
Yeah, technically it's a camp.056 message. But this isn't just a formal email asking for a refund. It's a highly standardized network protocol that flags the transaction. The critical catch is that Titan Vehicle System must voluntarily authorize a brand new reverse credit push.
And if they say no, or their system just isn't set up to process that camp.056 request automatically, you're looking at a drawn-out legal battle over an $85,000 typo.
Oh, absolutely. The speed of execution has completely outpaced the speed of error correction. If we connect this to the bigger picture, it forces you to reevaluate what that frictionless convenience on your phone actually costs the back end.
Yeah, the whole instant economy relies entirely on abandoning manual cash management for this highly automated, AI-driven liquidity ballet.
A ballet of algorithms ensuring the tank never runs dry based on historical patterns.
But that reliance on historical data leaves you with a really chilling scenario to mull over. The guide notes these models perfectly predict routine payday surges, but what happens to a bank's automated forecasting algorithm during an unprecedented, panic-driven digital bank run?
Oh, wow. Yeah.
Right. When everyone tries to instantly siphon the tank at 3 a.m. and the AI has absolutely no historical precedent to draw from. Definitely something to think about next time you tap send on a Sunday morning.